What's going on, guys? It's the Bulls and the Bears here with a weekly recap video with the wheel strategy. What a week we had. CPI made a lot happen. Let's just say that. We had a huge gap down after, selling off slightly Monday, Tuesday, Wednesday. We had a huge gap down. Maybe let's do a 5-day look. Huge gap down, and then an absurd rally that I haven't seen since the Russian invasion. And it might not have even been this crazy. If I go back to the daily chart in March, right up here, this is the closest thing I can think of. It was selling, so straight red days in a row, huge gap down to new lows, and then we surged. And that's exactly what happened here. We had several red days in a row, 5 of them to be exact, gap down big time to new lows, and then we surge. But last time, we had some follow through to the upside. This time, we did not. We rejected off the top of this beautiful channel I have here and the bottom of this massive wedge that SPY is in. Look at this. Maybe the weekly chart would be a little bit better. So we have 3 touches to this massive wedge at the top, the orange one, and then 3 touches on the bottom, over here, and over here. So it rejected the bottom of that wedge and the top of this channel, and man, did we reject. Even though I knew there was going to be resistance there, I was still thinking that was a pretty bullish candle. After significant lows, we could rally here. People might want to step in now. And a lot of volume came in yesterday too on that bullishness. So, okay, I think the bears were woken up. We could follow through, but we didn't. We really did reject there. And in fact, we kind of gave it all back. Look, these are 3 days right here. This is the close of Wednesday, and this is the close of today. It's hardly a difference. So that pretty much means like yesterday never even happened. But it did happen. And it happened for the wheel because it was a great day in the wheel. It was a phenomenal day. The best day we may have seen, or at least in recent history, the past couple months. Everything rallied like crazy, including ZIM. Let's talk about ZIM for a second. Here's the 15-minute chart still. Let's zoom out a bit. Maybe go to the daily first. I really want you to get the scope of this because ZIM, obviously, as you know, has been selling off like crazy. And we were settling down here. We tried to make an attempt higher, failed, came back down, tested the lows again. So just kind of muddying around down here. And I was trying to get all my new 100 shares down here. Only got 80 out of the 100 that I was looking for. And then this huge day happened. Wednesday was crazy for ZIM. It was up like 12%, 13%. And the 80 shares that I added, the new 80 shares that I was trying to build to 100, I ended up closing them. The blue line here, at 26.53 was my cost basis on those 80 shares. These green lines are where I bought 20 shares a pop. These green lines. Here, here, and then down here and down here. My average is 26.53. We popped up to 27.50. We were above a full dollar above my cost basis. I ended up closing the shares at the yellow line. I had that marked since day one because that was like the $30 profit that I was okay taking on the shares, which was supposed to make up for like the cash secured put that I never sold. I ended up taking it there. I was kind of thrilled, honestly. Before, I was really sad that I didn't get my full 200 share position because I'd love to get that better average on ZIM and then sell 2 calls on it and whatnot. But at the same time, I think I'm more happy to get out of those additional 80 shares, take a small profit, and then go back to dealing with my original 100 share position. Because at the end of the day, that is the safest route to go. Because I'm less exposed now. I only have 100 shares instead of 180 or even 200. So that's done. I'll delete these lines, and that ended up being a $30 profit. So I'm going to delete every line now except my original cost basis way up here at 36.47. I actually sold a covered call against it on this push up on Wednesday. So it's really good to sell covered calls on green days because you get a higher strike. You get solid premium that you're looking for at a higher strike. So that either you're going to like that no matter what side of the fence you're on. If you don't want to get assigned and lose your shares, well, you're at a higher price. It's going to be more unlikely for the stock to get up to that price because it would be super extended. Or if you do want to get out of your shares, you're getting a higher strike and you're getting a better profit, a better exit on those positions, on that position. So selling calls on green days are nice. Selling puts on red days is just as nice. So I ended up selling a covered call at the $30 strike because it was just a monster push. I was like, although it's below my cost basis, I'm going to do it. I did that last week. It worked. I'm doing it this week. I got $40 premium. That's a lot. That'll adjust my cost basis by 40 cents. And I sold the $30 call. So I'll mark that here. So it would have had to close way up here at $30. If it did, I would have realized a $600 loss in the position. Oh well, I'd be done with it, which is great. It sucks to take that loss, but that's the risk I was willing to take with selling this covered call, because I thought there was a very good chance it wouldn't get it. And now I feel 100% safe that it's not going to happen, because we rejected so hard on SPY that I really do think it's going to get ugly starting this week, to the point where there might be a Black Monday, where the market just completely collapses. My thought process on that being that this huge bullish move on Wednesday was the bulls' final hope. We got insane volume coming in on a massive push after new lows. So after new lows, you have all this volume coming in. It was a massive, massive green candle from open to close. We rallied $16 per share. That's insane. And we closed near the top. Time for a 1 week, 2 week rally, right? Wrong. This thing rejected like never before. And if it comes all the way back down and breaks the lows, what do the bulls have left? After that was their last hurrah, and for that to immediately fail, if I was a bull, I would say, okay, that's it. Like, it's not happening. Sell. So that's how I'm thinking next week might go, which will be bad for the wheel. But thankfully on Thursday with CPI, I was able to unload some of my positions. So my cash secured puts that I sold were great. ZIM shares off the table, some of them. And well, let's get into those now. The DOCU cash secured put. I sold one at 41.50. We came close on that gap down on Thursday, but had that massive rally, closed it for a profit. So I sold that one on Monday for $29. I closed it for $4, and it was a $25 profit on DOCU. And that was part of the game plan too, from my game plan video. The next one was Pfizer. I played the 42 strike, sold it for $45. We were below it this week, but that huge surge helped us. And I sold it. I closed it on that day after the huge surge for $15 for a $30 profit. So that was another cash secured put that worked. It would have expired worthless anyway, but I decided to close it early. And that was the end for my week. So I sold the ZIM shares. I profited from DOCU cash secured put and the Pfizer cash secured put. So that was it. And that was a total profit of $85 on the week. And now I'm up $127 for the month. With Intel's covered call still working. Intel's covered call, I sold a month out at a high strike, and that's going to be realized as profit. I'm not going to use it to adjust the cost basis. I'm just going to realize it as profit. So it was $134 in the pipeline, which would put us at $250, $260 on the month. So that's where we stand to be. At least we still have a couple weeks left to go to sell more puts and make more profit. Dow Inc. Let's just talk about some of the other plays that I called for the week. Dow at 42 worked like a charm. ZIM was one. I covered that. Coles was another one that worked as well. Sold the 25 strike, and then that didn't come close to being assigned. And those are the three plays I mentioned: Dow, Coles, and ZIM. And then of course I did Pfizer and DOCU, and those all worked out. And now I have a lot less exposure. I have only 100 shares of ZIM instead of 180, almost 200. And I just have the Intel position. So no cash secured puts are working out there anymore, because I did carry over Pfizer into this week. So sometimes there are cash secured puts that carry over. Not this week, all clean there. Just Intel and ZIM. Should I just call it ZIM? I watched a video on it and they said ZIM. So I might just say that. We'll see. comments down below. And I think that does it. I'll still look to make a play this week with cash secured puts or whatnot, but I honestly, depending on how Monday is, I'll wait a little time, see where we gap down or up, who knows. I'll wait to make my call, because it's going to be a judgment call at that point, because I am pretty nervous right now for some downside. And I'm fine with that. Like, I'll trade it in my other account, but I'm not going to want to have any of those positions cash secured puts going if that's the case. So I'll play it by ear. Still going to make a game plan video, and we're still going to try to realize profits on the month, because that's what this is about. Trying to get that monthly income by selling options and making your open positions work for you. So that's what we're going to do, and that's the end of this video. So thank you all for watching. If you enjoyed, hit the like button. Let me know what you think your predictions are for the next week. As always, subscribe for more content, and I'll see you all next time.